Well, 2013 is coming to a close, and so is the deadline for making charitable contributions that you can report on this year's tax return. The more you give, the more you can deduct, and the more money you get back from the IRS. Joining us now to explain is Frank Nico. He's CBN's Director of Planned Giving. And Frank, it's good to see you again. Thanks for being here.
Good morning.
All right, what are you telling people at this point? What's the key thing they should remember? Let's assume that they have bought some stock and the stock market has been real good this year and their stock's gone up. What do they do?
Well, let me first mention last year when we talked in December at this time, we were the economy was facing the fiscal cliff. And so the president and Congress, they agreed to pass the American Taxpayer Relief Act. Mm-hmm. Now, it's not a relief for a lot of the high income earners. There's 4 taxes that took place. There's an increase in the ordinary income tax from 35% to 39.6. Mm-hmm. Dividends and capital gains tax increased from 15 to 20%. Mm-hmm. Then there was the phase out of the personal exemption. And there was also they reinstituted the P's limitations, or the provision which limits itemized deductions. And on top of that, the Affordable Care Act imposed a 3.6% surtax on net investment income. So there are charitable strategies to counteract some of those tax increases, not only for the high income earners, but really they could apply to taxpayers in all the tax brackets.
All right, tell us.
Okay, so for one of the strategies is giving appreciated stock. It's a double tax benefit. You can give and get a charitable deduction for the market value, and also you bypass the capital gains tax on the appreciation. And so I have like an example.
All right, go ahead.
So like someone, let's say the stock market like this past year has gone up about 20%, and since 2009, it's had a large increase. So if a few years ago you bought a stock for like $5,000 and now it's appreciated to $10,000, that generates a charitable tax deduction of $10,000 and federal tax savings of like $3,960 for those in the top tax bracket. Besides, you bypass the capital gains tax, which would be 20% for the high income earner. So when you look at that for a gift of $10,000, you're talking about $5,000 tax savings right there.
So you actually almost get your money back.
Yeah. I mean, it's just a great strategy.
I am a great fan of charitable remainder unit trusts. Do you want to talk about them?
Well, charitable remainder unit trust, they're great because you can set it up where you can create lifetime income or income for a term of years. But it's ideal for appreciated assets when, let's say, you have a business you're selling, or you have real estate or rental property. And so the key is getting that trust set up first before you have any kind of legal binding contract. Right. Move that asset into the charitable trust, you get a charitable deduction, and you bypass the capital gains tax.
Well, if you've got some property that's not yielding much, or stock that isn't yielding much, for example, you can put it into a charitable remainder unit trust and then reinvest it and you can pay that money to yourself as a grantor, right?
Right. Yeah, you can set it up as a percentage that you take out every year. And then the remainder, after 1 life or 2 life, it goes to the charity that you've picked.
So it's deductible inside the unit trust, and the money that comes out you have to pay taxes on, but you can increase you can double or triple or quadruple the return on assets. Right.
And when you set that up, you get the deduction at that time. So that's the good thing about that.
Off the top.
Right.
All right. Now, if they want to, let's see, there's something else. If you have an IRA, and I have an IRA, well, most people have an IRA, but the law is very tough. If you get past 70 years old, you've got to start making a distribution from that IRA, or else you get hit with a big penalty. All right. How do they give and avoid that penalty?
Yeah, in fact, Pat, the penalty you're talking about, it's one of the most significant of all IRS penalties. It's 50% if you don't withdraw that for what you're scheduled to take. So one of the things that was actually reauthorized by Congress at the beginning of 2013 was the charitable IRA rollover. And so the benefit is that you can then take that distribution and will be tax-free. Now, the key is that that payment has to be made from your IRA directly to the qualified charity like CBN. We've had a number of donors that have participated in doing that charitable IRA.
So a guy, he's got an IRA,
Right.
and he can take as much as $100,000, pay it from the IRA to the charity, and he doesn't have any penalty. He qualifies for the distribution he's supposed to make, and he avoids all those penalties, and he can pass that money out to the charity with no strain.
Right. And it's an exclusion from income, not a deduction. And so there's an added benefit in that, it could affect lower, since it's reducing your adjusted gross income, it can actually reduce the Medicare premiums or the tax and Social Security benefits. So all those things come into play.
All right, now, if somebody wants to do that, and they're listening to you with all this eloquence, what are they going to do next?
Well, they can contact me at 800-333-2373. But I also, for all these gift strategies, it's very important to consult their tax advisor and concerning their own particular situation.
Sure. All right, well, there's a different number on the screen you're used to seeing. It's 333, what is it, 3373?
It's 333-2373.
2373, you got that? All right, and Frank Nico would love to talk to you, but this is a wonderful way of helping the Lord's work and also saving some money, saving taxes, and in the case of the IRA, saving a penalty.